All right. What is going on, everybody? Happy Sunday. Hope we got to watch some college football yesterday. Got to watch Michigan, Bryce Underwood's debut. He looked pretty good. We will see what next week brings when they play Oklahoma. All right, with that being said, let's get into it. This is going to be my entries and exit strategy video and a little bit of background on what I do trade. To start, it is called the Strat. If you go on to YouTube and look up Smiths in the Black, the creator of the Strat methodology was Rob Smith. He has hundreds of hours worth of videos teaching the Strat and what it's all about. I also watch a ton of Alex's Options videos on YouTube. I'm also in his Discord. I can share the link, I believe, in the comments here if anyone else would like to join that Discord. But he has awesome videos as well. He's been teaching it for about 5 years now. He has some shorter videos, 5 to 10 minutes, just to get the basic understanding. And he also has, 1, 2, 3 hour long live YouTube video sessions recorded in which he goes in depth and goes into extreme detail explaining the Strat and the different ways to utilize it. That being said, the Strat is universal. So there are many different ways you can trade the Strat. The specific type of Strat setup that I trade is 2 down green monthlies. I am looking for the current open month. So whatever month we are currently in. This month, though, I was trading all of August's candles. I'm looking for it to make its way all the way back through the previous month's range. And what I do is I utilize daily actionable and weekly signals to find entry into these stocks. So just to give a quick example, here is my scan that's set up with all 2 down green monthlies. So I have this scan, and this is the scan that I go through each night, and I can filter it by daily actionable or weekly actionable. But all of these stocks fit the same criteria, and I'll just buzz through a couple for you guys, all right? So 2 down green month, trying to come back through the month and get up to here. And you can look across every single stock that I trade. That is what I'm doing, right? 2 down green monthly, trying to come back through this previous month's range. Another one, ACI. That's all the scan is. You'll see the same setup on every single stock that you're looking at here. 2 down, breaks the low of this previous month's candle, comes back above the monthly open, turns it green. 2 down, green month. You just go through a couple more. 2 down, green month. You're going to see the same exact setup over and over and over and over again. And that's the beauty of the Strat, is it is so universal. There are so many ways to utilize it. I've tried multiple different ways to use it. My most effective is the 2 down green monthly. So if you do want to learn more about the Strat, my advice to you would be to try and find one specific setup and trade that exact same setup. Just repetitive action. You're looking for the same thing. You're looking for the same movement every single day. It doesn't matter what stock you are trading. So here, as you just keep going through, 2 down green month, 2 down green month. You guys get the picture. Now what I do is I utilize daily actionable and weekly signals to try and find entry into these stocks. So all of this scanning that you guys are going to see today is irrelevant because the month ends, and at the end of each month I reset my criteria. But if we were not going into a new month, you could look here and say, all right, see, we've got a daily actionable signal. You have the 1, 2 down, 2 up to go back into a stock like Wells Fargo, EXAS. Again, you have the 2 down, 2 up, daily actionable signal. Keep going through it. 2 down, 2 up, daily actionable signal. 2 down, 2 up, daily actionable signal. So that's what I'm looking for. That's what I'm always looking for. That is how I find entry into these stocks and initiate my long positions. Moving on. Next most important thing you need to ask yourself is, what kind of a trader are you? Are you a options trader? Are you a shares trader? Are you a day trader, or are you a swing trader? Options, if you trade options, just because of the risk, what I like to do is I like to go 2 Fridays from the current week that we're in. I should have put this in the PowerPoint. I'll add it to the PowerPoint before I post it in the comments. But I like to go with 2 Fridays from the current week that we're in. So this week we are going into the first week of September. So when I do start looking into scans, I will be looking to purchase hold on, let me pull up an options chain. I will be looking at the September 12th options contract, and I like to go right at the money or $1 above the money. I like to keep it close to the current price while not getting too expensive as well. And I will go in with 2.5% of my portfolio max on the initial entry. So to put that simpler, if you have a $10,000 account, I will initially enter with $250. 2.5% Don't get burned. You want to protect your capital. You don't want to be sizing too big on any individual position, because this is a strategy in which some will fire, some will not. And the ones that don't, you don't want to get burned on those. So then shares traders, just because you're a little bit less risk on when you're taking shares, you can go with 5% of your portfolio as long as you keep those tight stops. You won't get burned in the same way that you will on an options contract, just because of the volatility in the IV and all the Greeks or whatever, If you are a day trader, obviously you reduce your full position before the end of the day. Swing traders, if the stock closes near the highs, you're okay to swing overnight. If it's not closing near the highs, I would reduce my position or I would fully exit. I am primarily a swing trader. So what I like to do is, if I initially enter with one position and I can get more than one contract, let's say I take 2 contracts and that's 2.5% of my portfolio. I take it on the daily entry. If I get a nice move throughout that open day, I will take 1 contract off. I don't want to necessarily always carry the risk. Now, if the SPY's 2 up, the Q is 2 up, all the monthly, weekly, everything is strong and in force, then I'm more likely to hold it. But you have to be, you have to adjust based off the market conditions and what's going on. So last week, when the weeks are kind of inside, the days are kind of choppy, you don't want to hold so much overnight. You'd rather just reduce, protect capital, and be ready to see the next day. But if the market's going, it's up every day, every single day, it's moving up, like it has been the past kind of 3 or so months, then you're okay to hold overnight, because you know that the market is in a bullish uptrend at the time. All right, so taking entry. So I got some examples set up, so just give me some time to kind of go through this. I might get a little bit off course, but try and bear with me here. So if it fires and goes right off the daily trigger, you stay long and you set your stops to break even. So here's the first example here. So we were looking at XOP off this inside day and up, and that's exactly what we got on Wednesday. So if you go to the 30-minute here, here's Wednesday, right? So it breaks this trigger here. So right here is where you're looking to take entry. Here's the first 30-minute candle of the day. Absolutely comes ripping through that daily trigger, taking the 1-2 up day in force. It's not even close to coming back to your initial entry, which would have been here. So it closes that candle 129.63, 131.50. It closes that first 30-minute candle $2 above your entry. So you've already gotten a very nice move, and you should be comfortably up in your position. At this point, you can just set your stops here, especially if you're a shares trader. Set your stops to right here at break even and just let the stock go and see what happens. Don't don't babysit your position. Don't panic until you're given a reason to panic and get out. Look how clear you are. Even at the lowest of that day, it still stays almost $1 above your initial entry. You are good to just stay long. Stay long, stay long, stay long. The buyers are telling you that they're there. You have no reason to get out. Stay long, stay strong, set your stops to break even. And that's what you're looking for. You're looking for a winner. And had you gotten in here, 129.63, in 3 days, you got a $4 move. I mean, that's a winner. That's what a winner looks like. So that's how I get in and stay long, and then I'll just kind of ride that position. So that would be another example of one where I take it up here, and yeah, it closes the day. Let's see where we're going to close the day. Closes the day up in here. So it's moved $2.50 essentially. If I have 2 contracts there, I'm probably going to take one off, because that's a fantastic move. Take 1 contract off, let 1 contract go. I know the stock didn't give you a reason to get out, but as an options trader in the week like we were having last week, where it's choppy and you're kind of uncertain, take that profit off. You've made your money. Like, let 1 go, because the 1's going to keep going for you. But if you're a shares trader, no reason to reduce at all. No reason. But again, options, for those that trade them, you understand the risk. You know how the contracts can move. And when you can protect yourself, you should. All right, here's the next one. So if you take an entry and the first 15 or 30-minute candle fail, you cut immediately. Here's an example from Friday, which stock just gave me bad vibes going in. I had a feeling it might get burned there. But here, right? So here's your 9:30 candle. Here's your 15-minute 9:30 candle, right? Comes up, takes the day 2 up. So it goes 3, to up on the day. Then you get this 15-minute shooter, and it's coming right back to where your trigger was. So the 9:45 15-minute candle opens, and immediately they sell it back down into this range. That's a loser. Soon as it breaks below right here, get out. Yeah, you're probably going to lose a couple bucks. That's okay. Get out. Because if you let it go all the way down here, guess what? You're going to lose even more. If it tries to set up again, if it happens to set up again during the day above this trigger, you're going to get long. But right now, after basically 18 minutes of the market being open, this stock told you it was a loser for the day. Get out. Don't hold a loser. Just protect your money. Don't average back in. Don't double down. Cut a loser. Cut your loser. Because if you had gotten earlier in the week, you've got this going for you still. You've got a winner. You know you have a winner. You're trying to get more winners and stack winners. But this stock is telling you, loser. Get out. Goodbye. Swing traders. So if you do hold one contract overnight, or if you're a shares trader, these are kind of how I like to play it. Again, everything in trading is kind of not reactive, but you have to be aware of changing market conditions, and you have to kind of feel, the more you trade, the longer you do this game, you start to feel how things are moving. So if you start to get bad vibes or whatever, do what you will with that information. But again, trading, as much as we can plan and pre-trade and try and set all these things up, it's also a little bit of a feel game, and you have to understand that when things seem a little dicey, it's okay to cut down on what you're holding. So if you're holding overnight and the day opens with an aggressive 15 or 30 against, you cut immediately. So I don't have a perfect example of this, but hypothetically, let's say you were to get long Rivian here in the middle of the day on Thursday. So you got long here when the daily turned because you see it coming back and going too. Then the day opens and you see this 15 or 30 against you. You cut that immediately. You just get out, because if you did it the right way, you should still be in a profit. You swung overnight, you were holding a winner overnight, but then the next day opened and it showed you it was a loser. Get out, cut it immediately. You should have a gain. If it's going to finish off the outside month, the stock will set up again and you can get back in. But for that specific trade, you need to just get out, take your gain, and move on to the next one, because there will always be other opportunities. So that's getting out. That's why you would exit on swing trading anytime after the first day of holding. Now, if you take, if the second day opens and it goes 2 up, stay long. You're good to stay long. So I keep doing that with the slides. Here's an example here, AXP. All right, we looked at this one, I want to say, on Tuesday. You had the inside indecision candle day here. You had the 3 on the day. So you initially entered the position here when it went 3 to up on the day. And then it stayed solid all day, right? Closed relatively near the highs. Nothing too aggressive, but no harsh selling either. So here's all the 30-minute candles just slowly kind of working its way up, closing the day right up in here. So you swung overnight, and then you have this opening 30-minute candle that flushes right through and goes 2 up on the day again. You can stay long. You have a winner. You have got yourself a winner. So if you're long, you can adjust your stops if you want to. They should be at break even, but you can also move them up and just protect yourself again. The most important thing to do is protect yourself at all times. The stock market can be crazy. Always be protected. Never have too much cash in the marketplace. Always be ready and have cash on hand, not all of your cash in the market. So day goes 2 up again, right? And just keeps trending up. Then it closes the day Thursday, again, at the high. So here's Thursday, close to finishing off that outside month, which is exactly what we are looking for. As Rob would say, the prophecy is complete. The outside month has been completed. So then you end the day Thursday, Friday opens, and bam, what happens? We go 2 up again. So you could have been long from right here, 320. And in 3 days here, you got a $12 move. Options contracts printed. Even if you're a shares trader, you got $12 per share on that stock. That's a winner. You want to keep that winner. All right, so if you're holding and the second day opens and you get a 30 or 60 reversal and the daily goes red, you want to cut. So let me try, and the example is much better to show you there. So let's say you're long, you get long off this 3, 2, 2 up day here. Here is the candle from Friday, the 30-minute candle from Friday. So you see it comes up, it goes 2 up on the day. Bam, that's what we were looking for, right? We're long. We can still hold. We got long right here. We can still hold. Winner, 174 up into here. Day goes 2 up. Second 30 of the day opens. Uh-oh. Comes back, goes red. Turns this daily red. Just cut it. It's made a 173, $7 move in 2.5 days, basically. Day goes back red. You don't know what's going to happen. But again, you want to protect yourself. This day goes red. It could come in and start forming some kind of a shooter and start coming back through this range. So as soon as that 30 or 60 closes red, which would have been right here, because here's the open. So the second 30 closed right here. That daily turned red. If you're long, cut that position. Just get out. Day 3 and beyond. So if you're long for multiple days and the daily goes 2 down against you, reduce half or full position and see if it sets up again. So here's when we were looking at NU. So I got long NU, I want to say right up in here off this inside day. Comes up, goes up, 2 up, 2 up, 2 up. Again, here's your next chance to add. The first day the stock told me to get out potentially was right here. So as soon as this breaks the low of here and starts coming down into here, just get out. You've been long from either here or here. Lock in those gains. Get out. If it sets up again, like this daily's trying to come back 2 down and go 2 up green again, you can get long again. But if you've made a gain and the day goes 2 against you, just get out, protect your profit. Additional daily actionable signals. So if you're long and the daily candle stays inside, you take an actionable signal when the daily triggers. Chewy is an example of that. I'll show you in 1 second. But then you reset the rules as if it were day 1 for the trade. So if you take the inside day up and you get an immediate 15 or 30 against you, you have to get out. Exit the whole position here. You want to cut the whole position because, again, you were already long, so you should be in a winner. You had a daily actionable that you thought was more evidence to go up, and it failed. Just get out, exit the whole position, and lock in those gains. So here, Chewy, right? Here we talked about this. I don't even remember when this was. This might have been over the weekend, or maybe it was Monday. I think it was Monday. You got the 2 down. You have the 3, 2 down, 2 up daily. So you get long right here. You're long all day. Solid day all day. So this is day 2. This is day 1 of your swing. Here's day 2. Stays inside on the daily here. That's another daily actionable signal that you can take to go long. So then it breaks above here. You take that inside day to the upside, bam, you've added. So now you bought here and you bought here. So your average is probably right in here. You take that long again. Then you hold it. Again, it closes near the highs. That's fantastic. You can stay long there. Then we have Friday, another inside day. So again, if it comes through and it takes the day up again. Oh, man. Keyboard's sticking. Takes the 2 up inside day up again. Boom. You can get long again. So you had initial entry, solid day 1, inside day 2, inside day up, actionable daily signal to the upside, add again here. Another daily actionable signal inside day. If it takes this up, add again. Because what's it trying to do? It's trying to come back to this pivot on the weekly and then come up here and up here on the monthly. So it's still good for you. All right, end of the month. So on the final day of each month, I'll close all my trades and I reset the watch list. I don't have any evidence of that the monthly participant being the buyer is still there. When I look at this watch list, what I know is sellers tried to take it down. Buyers came back and they bought it back up. I know that in every single one of these stocks on my watch list, that is what is occurring. The seller tried to win. The buyer came back more aggressive and said, nope, we want to buy this stock. It's coming back through. That was occurring on every single one of these stocks. When the month rolls over, I no longer have evidence of that participant, meaning that I no longer have the evidence that I need and want to be in the trade. So again, the first day of the month, I won't trade. I'll wait for setups to come. And then slowly those setups will start to trickle in. And that's when I will start to build out my watch list and my daily actionable and weekly actionable signals. Again, you start the month slow, let the setups come to you. And then when they come, you're ready to go for it. Closing thoughts here. I think I did all right on this video, probably like 20 minutes. I was trying to keep it clear and concise, but I think I did the best that I could. But here we go. Closing thoughts. Not every trade will be a winner. Not every trade will be a winner. You will take losers. Part of trading the strat is you are trying to be aggressive and be ahead of the curve. There will be losers. That's every stock you trade. It's okay. Just know this going in. If you take a trigger and it fails, don't get mad. Don't revenge trade. Be patient. Wait for the next setup to come. Do not double down. Do not just keep adding to a position. Do not hold in hope. Cut the losers. Get out. You will take losers. This is trading. No one bats 1,000. No one will ever bat 1,000. I promise you that. Take your losses. Keep them small. Cut them quickly. And get set up. Stay in the right headspace. The winners that go are going to pay for the losers. Perfect example. AXP. Take that 3, 2, 2, 2. You've been long here. Boom. $12. That winner, if you could lock in that winner alone, and let's say you took Rivian and it failed. It failed in the first 20 minutes. You lost maybe 10 cents there. You won $12 on AXP. The winners will go. Another one. I mean, MPC, all the ones this week. Like, just look at that. Boom. They pay for them. They pay for the losers. Look at these moves you're getting. The winners pay for the losers. Cut your losers quick. Get out. Be patient. Wait for the winners. Ride them. That's all you got to do. All right. I welcome all questions, general feedback, comments, videos you want to see from me. I'm going to work on making a scan for next week. Again, this week it's tough being at the end of the month, but next week I'm hoping to take a video for you guys of how I actually scan during the day or during the week, just so you can see, and I can also share those Thinkorswim scans with you guys in the comments, I believe. If not, just DM me on Discord. It's Alex's Options Discord. Go to his Twitter, Alex's Options. You can find the Discord there. I'm in there. You can DM me, ask me questions in the general chat, whatever you want to do. Thank you, everyone, for your support this far. This has been awesome. Hope to keep doing it to you guys. Please keep giving me feedback on anything. I really appreciate it, and I really want to help you guys. This has been awesome. So enjoy your weekend. Got a couple more college football games to watch. And let's get back after no trading on Tuesday. Get back after on Wednesday.